Hello, everyone. I'm back with Mahesh, our data scientist, Mahesh Tank, all the way from India. Myself, José Ricaurte, Jaen, directly from Dubrovnik. This is the War Room. And as usual, the weekends, it's not just to have fun. It's not just to share with our family members. There's a lot of everyone quarantine mode. That's fine. Maybe you have your own space. Maybe you don't. But still, it's a time for us to reflect. What happened? Why we did what we did? And look to improve into next week. That's what we do. That's the core of the War Room. This is not just content. We reflect about our trades, ideas, and we look to see what may be unfolding next week. So we, as usual, prepare a trade plan and ideas that you guys can use to, hey, why not make a living out of online trading, investing online? It's available. Hey, Mahesh, how are you?
Doing good, Jose. How are you?
I'm excited. There was a lot of few trades that we had. I know you had a lot of success going long, the Great British Pound.
Yes.
I think I remember we had a great success with the short dollar versus Swiss franc. It went down it moved lower at about, I think, 120, 140 pips. The simulation turned out to be a disaster. Yeah, but the trade idea, there are a lot of the audience from the YouTube channel, Markets Traders Daily. I think they make good coin. You also made a lot of money. We have clients that they made a lot of money going long, more than $3,000, 3,000 euros in profits going long multiple times. The Australian dollar versus the US dollar, which has been the long trade in the last 2 weeks. So it went very well. And I talked to you about what we may expect this week. So why you don't go ahead and share your ideas?
Sure, Jose. Thank you so much. So first of all, let me just go back and just explain to our viewers how we were able to see GBPUSD as a buying opportunity. So let me just bring up the dollar index. Let me just grab my annotation tool. So this is what we saw the previous week. We saw a doji and we saw a potential weakness in the USD. And we thought, what would be the best pair to go against the USD? And of course, we shorted USD CHF, USD CAD, but also specifically we issued a signal on GBP USD. So let's just go to GBP USD and see how it happened. So as you all know, we primarily check out the fat man. The fat man is what reveals the insights of the currency flow. Just by looking at these lines, we can get an understanding about how each currency is flowing and how each currency stands with regards to the other currencies. Are they strong or are they weak? So what happened here is, the light blue color is the USD, and the orange color, this one, is the Great British Pound. And we see that there was a cross that happened. The USD crossed down, the GBP crossed up. And when we saw it, let me just bring up the GBP chart. Let me just switch the time frame to the daily. Okay, so when we saw it, this portion of the move had already happened. It happened till here, but we knew that there is a potential because the cross has already happened. And this right here, let me just grab the drawing tool again. This right here was the past week, the red doji that we see. And we made a video on the weekend saying that coming week, we would be going long GBP USD. And let me just show you what happened at the market open. At the market opened, it gapped down. Just a minute, the screen seems to be frozen. Okay, so right here, you see this gap. This is what how it began the week. So it gapped down, and any person who saw the signals could have entered a position over here. So we just keep an entry position over here. And we had a buffer of about 500 pips. Is it right, Jose? We talked about 500 pips, right? Up to 500 pips of stop loss.
Yes.
Okay.
That's yeah, we were joking. How if you potentially you take $5,000 at the beginning of the week, and now we have one account that we track on our intraday trade ideas is yeah. So you started the week $5,000, 5,000 pounds, 5,000 euros, and you go long. At the time you went long one standard lot.
Yeah.
It was practically impossible for us. Not likely to happen that it will drop 500 pips. So it went out to be a great idea as well.
Yes, absolutely. So let us just check how much it could have fetched us. You know, if you entered over here after it gapped, if you entered at this point, you would have had a drawdown of about, about 60 pips or so, maybe 65 pips. And then you would have an opportunity of up till 250 pips. Or if you're still holding the trade, I think you should be anything up about around 210 pips or 211 pips. So that's a good profit to be holding as of the, as of now. Also, I want to show the screenshot. Remember, we could have always saw the signal. We could have always understood the trade direction, and we could have just gone ahead and kept on adding positions. We can do scaling up of the positions. You can just improve your reward by understanding where the trend is going. So give me a moment to bring that up.
Yes, go ahead.
Jose, do you see the screen?
Yes, I see the screen now. Go ahead.
Okay,
Yeah.
so yeah, right over here at the bottom, you see that was our first entry position. The very first entry that we took, it was over here. This is the entry. And then we saw that, the trend is building up. The EMS also took another entry. So this is all about 4 entries right now. 5th one, and this would be the 6th one, 6th entry right over here.
Yeah.
So we kept on building the position, and yeah.
Yeah, and it's beautiful because a lot of the trading courses, a lot of the gurus out there, they don't really lean into teaching how to do this. And this is why I started like didn't ask you too much what you think about recording together. Not that I wanted to impose myself, but it's how we have so much that I want to share, and I know that you were eager to share with the audience. This is the kind of things that are cool and profitable, add in the direction of the trend. There's so much myths out there. They say don't add to your losing positions. Fine. So what should I do? You see, no one answers those questions.
Yeah.
And I'm just fed up of all these gurus that they say they trade, because we both of us we trade. I know how busy you are with your family and your commitment to God, and also your data scientist activities, your research, but you take the time to trade, take the time to do these recordings. You know how busy I am with different businesses and how much we devote to the markets. Is because as Corona hit our society, we also need to find this time to hit our trading, hit the trading, hit the way we invest. Or if you don't trade at all, not and I said this so many times. I talked to David, one of the guys in the team I'm part of in Spain, is not taking action. It's the real danger. If you are not trading, if you're not learning the skills to do this, if it's a mistake, I'm just telling. Hey, listen, I was reading on Instagram. They say 80% of the restaurants won't reopen. 80%. That's a scary figure. I can only imagine the number of hardworking women and men that won't have a job in the next 6 months, maybe even shorter. And what kind of skills do they have? Are they going to be just looking for another job? And remember, not to be offensive, but job just above broke.
I agree with you. Yeah.
So that's what it is. Please continue, Mahesh. This is beautiful. And this is exactly the kind of mathematical approach to trading that makes someone a success.
Yeah, absolutely. Also, you were talking about people keep adding to the losing positions. I think it has to do more with fear and not understanding the market, and also having a lack of conviction. But what we are sharing with you guys now, about the fat man and the Hawkeye tools, I think it should be good enough to give you a conviction to be able to believe in the trade that you're entering in. And once you start seeing it in your direction, you will have the confidence to able to build up your positions and leverage those positions, leverage the actual leverage that the forex market offers, and make more money for yourself.
Indeed, indeed.
Yeah. So let me just do a quick recap over here. And see, we didn't see this before. We just entered in late. That's why we were only able to capture this part of the opportunity. But if we had seen this cross happen previously sometime back, maybe we could have entered in right over here after this engulfing candle. We could have just entered from over here and we could have rode the entire trend. But as we have made a resolution, Jose, do you remember that we would be scanning the markets each day? We would be checking 1 hour, 4 hour, daily, and everything.
Absolutely. Now, the way we're just approaching and the intradays ideas that we have, plus everything else we have on daily going on daily basis, applying roadkill volume on lower time frames will allow us to have multiple opportunities across the currency space. So we have plenty on our plate. That's for sure.
Yeah.
That's for sure.
Oh, sorry. I think some mistake happened. Just give me a moment to fix it. Okay. So what I want to say now is that I'm not looking into holding the position on GBPUSD, because you see right here, the GBP on the daily is going flat. And this is the 4 hour to my right hand side. You see that the GBP has rejected the fair value level, and it is possible that it's going to curve down now. And we see that the US dollar is rounding up. And on the chart, the price chart, if you see, this is GBP CHF. Okay, on the price chart, if we see now, let's just have a look on the daily. We see that it's at the 61.8 level. It is a strong level on the Fibonacci. If you observe the downtrend, once it comes here, there is a possibility that it rejects and go down. Or if it has to go up, it has to break above this level and come back and successfully retest. And then it's going to head back right up to this point, or maybe this point. So I think for the coming week, avoiding the GBP/USD could be a wise choice, is what I think. So in place of the GBP, I found another pair that I'm looking forward to trading, the AUD/JPY. So the AUD/JPY has a lot of potential according to what I see. Let's just check the fat man first. On the fat man, you see this is the AUD, the red line is the AUD, and the pink line is the JPY. And we see that they have an established direction. The JPY is actually heading down, and the Australian dollar AUD is actually going up. The JPY has not gone to the oversold level. Just let me annotate that. This right here would be the oversold level, and this right here could be the overbought level at this area.
Yeah.
So we see that none of those have gone that place, and we see there is a strong engulfing candle on the the AUD/JPY weekly. So it is possible that it is going to continue, and this may come to at least 61.8, and maybe even to these levels. This would be the 61.8, and it is possible that it may come to this level too. But looking from the fat man, what I can understand is that this would be a really good trade to get into. Let me just show you the daily view on this. Okay, daily view, we are seeing that the volumes are good, and it's just a minute. Okay, the last day, the Friday, which was yesterday, we don't have any volume, so we don't have a corresponding price action here. This looks like a doji, but once the market opens, what can happen is, because this is the 4 hour to my right hand, okay, right over here.
Yes.
Yeah. So we see that AUD on the 4 hour is in the oversold, overbought condition, and JPY is actually coming from the oversold condition. So it is possible that the next candle that forms on the weekly, it is possible that it may retrace maybe up to these levels and then make its move to the up. So we just have to be watchful for maybe for the first Monday or Tuesday and see the price action, what the price action is doing. And it is possible that of the total risk, we can enter maybe 50% of the risk that we want, and then start building the positions as it goes down, and then leverage the opportunity and look for a proper take profit.
Absolutely. Mahesh, before we move into study coffee with a chart that I want to share with the audience, can you take a look at the euro versus the Japanese yen, the euro Japanese yen cross?
Okay.
Please.
Sure, just a minute. Let me erase this.
Go ahead.
Okay. Okay, euro Japanese yen seems very, very choppy. Let's see the weekly. The weekly is pretty choppy too. The reason, okay, my personal opinion would be that I would not be interested in this pair for the following reason. Just let me show you why I would not be happy to take this trade. JPY going down, and euro is also in the same direction. Though euro may be in the oversold condition or the oversold area, but when I see that both are, like it's just like positive or negative, both are in the negative. So I would not be wanting to trade any currency pair that is moving in the same direction. And that is the reason you see so many spikes, up and down spikes. So I think if we go down on the lower time frames, it's it's going to look pretty ugly. Look at this choppy price action.
Okay, this seems to be like it's not conclusive, a lot indecision. Still see that the 4-hour chart sort of bullish, and we may have a trend Fibonacci on the 4-hour chart, 2 trends Fibonacci. And then it can seem to be retesting, go to retest 119.
Would you like me to draw the fib from any place?
Yeah, you can take the reverse, the trend Fibonacci from the bottom to that. Yeah, right there you have one big Fibonacci, trend Fibonacci in the 4-hour chart. Look how it has been fighting 1, 2, 3, 4, 5, 6, almost 7 candles near the 38.2%. And now it seems to be ready to retest. The first target will be 0.0 Fibonacci. That's somewhere around, I presume, just looking at it, at 119 value. And then why not go and push all the way to probably 119.60 and maybe 120. So it seems to be positioned, but I totally follow you on the not conclusive exactly based on
Just have a look on the 4-hour, Jose.
Yes.
This is the JPY. This is the euro. Again, they're moving in the similar directions, up, on the daily, down and down. So
yes, and that prohibits us to have a clear reading of what is taking place. And for that reason, professionally speaking, we're just going to pass on that trade. All right?
Yeah, that's good, because we don't want to be stuck in a trade that doesn't move much or just keeps on whipsawing.
Indeed. Okay, Mahesh, do you have anything else to add before we move into coffee?
Nothing. I think that would be all. I would be looking forward to the, as I said, the AUD JPY trade, because AUD has been very, very oversold, and it's coming off from the oversold value. So it's going to return its strength. And JPY is on the decline, as we see over here. This direction, initial direction that I showed you, JPY is down, AUD is up. So it has a lot of potential to go up. Let's just for the record, we'll just take a Fibonacci on the weekly, the previous weekly candle. If we take this, and if we just believe that it is going to retrace to this level,
okay.
So we would have a drawdown of about 250 pips. So if we can maintain a risk appetite of about 400 pips, then we can at least look at this target So that should be something about 500 pips.
Okay, let me just write that down. About 400 pips of drawdown. So what we do is we'll start our simulations for the week this time, just one trade at a time.
But also we need to position, you need to break down the risk and position. Like for example, have a look at it over here. Maybe you can enter with 70% of your risk over right at the opening and place the other 10% on 38.2, place the other 10% on 50 level, and the final position, place it at the 61.8. So what would happen is the stop loss would remain same, but your entries would be much lower and better entries. Your overall risk is going to come down.
Absolutely. We will do that. We'll see how to structure that. The opening, probably by Monday, we'll be placing our trades. All right?
Yeah.
Okay, Mahesh, please go ahead. Let me take the floor. Let me go ahead and talk about a little bit just to close this session, this study.
Sure, it's all yours.
Weekend study session. Let me take a look at, where do I have it? There we go, coffee. As usual, guys, thank you, Mahesh. That was refreshing as usual, just learning how to follow Hawkeye traders in our favorite leading indicator tool, Fatman. Now, I'm not going to waste your time, guys. I'm just going to go over a trade that we already have. It has been placed on client's account. We started trading. The idea is that during the weeks of March, where the sell-off started, we got a lot of news, and we heard how the containers of cacao and also coffee beans, some were stuck in ports around Brazil. That's what I heard. So my idea right away was look at commodities that may suffer a debalance and what will happen. This is coffee, the CFD version for our clients in Europe. You can always trade the futures contract. Okay? Now, what we're looking at is on the last legs, the last couple of weeks, 1, 2, 3, 4, 5, about a month, the last month and current month, is this big push to the upside above, almost hitting 130. Then we have 2 weeks that we're trading back to 135, and then finally somewhere around 112. Now, I just needed a trend Fibonacci projection from the low that I know to the high, very short weeks, to know that my 61.8% Fibonacci, to keep myself long buying coffee, because we think there's all the evidence for a break back to 145, going to prices that we saw back in 2017. Now, looking at this in a very conservative way, we're looking at this correction, probably have it too high, probably can move this, as now we have support at 112.50, take it lower, and the final projection, as you can see, will be at least 140. Just a few weeks ago, almost month and 2 weeks ago, we were trading around this level, 106, 102. Look where we are. We went all the way up, almost $28. Wow. $28. Also, if Mahesh is correct with his analysis, and in fact, the US dollar continues its trend lower, it will boost commodity prices. So we have been in a multi-decade price retracement for commodities, and this can be the beginning of long commodities. And of course, I like coffee a lot. I'm pretty sure some of you guys, you like coffee. Probably also you want to make some money trading coffee. This is our pattern. This is our mapping. We have been mapping what we're looking to do. We're looking at least initially all the way from this level to 140. That will be our first target completed by the trend Fibonacci projection. Now, this is not it. I want you to look at this. And now I'm just going to show you the final target I have. And there you go. This is our final target. We're looking at least on the second target, 175, and then why not all the way to 225. 100% development for the price of coffee. I'm just going to add one more thing. How do we know How do we know how to mark these levels? I'm just going to write it down. Coffee prices may go. How do we know that? Well, basically, look at this. We're just working with offers and demands. Offer zones, demand zones. This is the last offer. Do you see anything else happening? Well, then prices, they tend to, statistically speaking, they tend to go and close the offer. And that's what we're expecting. This is just the first target. Thanks to trend Fibonacci, it's easy for us, very easy for us to map. It doesn't mean that it will happen. We have an idea, we have evidence that is moving into that direction. And then once we are at these levels, what do you think what do you think will happen? Simple. Let me just have the pencil. Okay. Once prices break this level, you will have a new rotation, and then they move again. They may retrace, they may go back, and now you have a new rotation, and then you move and push to the final target. That's how it happens. It won't be just to the moon. No, slowly the prices start building up new floors, moving up, new floor, moving up, new floor. That's exactly what is happening. So just wanted to share this view with you guys. Still not too late to get into this trade, a little bit more risk. I will be taking, if I were to enter today long coffee, I suggest you have at least an $18 stop loss. May not be for you. Always remember, Mahesh and myself, we are not, I repeat, we're not your financial advisors. We are not money managers. We're not regulated in Germany or in the US or Canada. We study different asset classes, multi-asset classes. We do research, but that doesn't mean that we are regulated. At the end of the day, we don't incur in any liabilities if you decide to take our information and apply. We do want to make sure you're successful. We truly want that. But yes, at the end of the day, it's your responsibility. If $18 as a stop loss is too much for you, do not take the trade. Simple. For example, Mahesh talked about going long, Australian dollar versus Japanese yen, remember? And he suggested, let me just remove everything. He suggested, let me bring the whiteboard, take this out. Another trade that Mahesh suggested, simple, long, Australian dollar, AUD, JPY. And he said 400 pips at least, can be 500, why not? And he said there's an opportunity on the table to make 500. So it's not the most balanced risk reward, but it works. And he said you can start building up your position. So if you have $10,000, and that's how exactly what we're going to do, we're going to do $10,000. We're going to start with one standard lot. That means that if we were to get stopped out, which again, Mahesh, I got to tell you, I find hard that it's going to drop 400 pips in a week.
Yeah, it's not possible.
The probability is not likely. The odds are in favor of the Australian dollar right now. So one standard lot. Now, if it drops 150, which that I can see happening, hey, then we add another standard lot.
Yes.
And what we do is that we set up ourselves to success. We position ourselves accordingly. So what we're going to do, we're going to create that. We're going to follow we're going to stick to it. And what we're going to do in planning hashes for the audience, not only we will have it on my FX book, we'll talk about it in the middle of the week on one of intraday videos, maybe the European session on Tuesday, because there are no European markets on Monday. But the most important thing is that we just have pending orders. We start with one standard lot, then we'll set a pending buy limit 150. And if it drops another 100 pips from that entry, then we have another one standard lot waiting. Sounds good, right?
Yes.
Absolutely. So these are the trades we have. This is how we spend, besides sharing with our family members, maybe reading a book, listening to some music. We take the time to study. Guys, if you study, if you prepare yourself, if you reflect what happened during your week, you can improve. Remember, what gets measured, you can improve.
Yes, that's right.
Pretty simple. Okay, Mahesh, any final words?
Well, I just want to encourage the viewers to start studying how the currency flow, and that can be easily done by the fat man. And just want to leave you with a thought: if you're not trading with the fat man, you are a blind man.
There you go. Boom. Microphone. Drop the mic. Perfect. On behalf of myself and on behalf of Mahesh and myself, I want to thank you guys for joining us on the War Room. Weekend study. This is just like back to school, guys. Every weekend, we take the time to do these videos. Thank you for listening. Remember, if you're not subscribed to Market Search Daily YouTube channel, hey, it's free. Do so. Lots of great contents from all our colleagues. Randy Lindsay, Ross Mullins, Ross Givens, our boss, Dustin, Alan Pass, and the rest of the crew. We want to thank you guys. Have a great weekend. I will be coming back tomorrow. There I have another stock pick, another company that you guys may want to take a look. I'm actually taking a position during the week. You should actually look at it. It's a great stock. You will be surprised. You're going to love it. So thank you and see you tomorrow.